Hello, welcome to today's webinar. Today we're going to be talking about the steps you need to take to a speedy retirement. So maybe not so much speedy, but how about smooth transition? So I want to make sure we know the things we are supposed to be aware of to get that application from our agency to OPM, get our Social Security benefits started, our TSP withdrawals. So we're going to be doing a broad brush overview of all the steps you need to take in order for you to make that a smooth transition. My name is Tammy Flanagan, and I will be your presenter today. And I wanted to thank NARFE as well as GEHA for allowing me here to present this to you, and especially to GEHA for sponsoring today's webinar. You'll be getting more information about GEHA and their benefits, and also some information that they have prepared for you in preparing for your retirement as well. And that will come at the end of today's broadcast. So, as I told you, my name is Tammy Flanagan. My background is in federal benefits, and many of you might know me from previous NARFE webinars or perhaps the articles that I've written in NARFE magazine. But I've also done seminars for the last 30 years and also have been a NARFE member since 1988. So I guess this is my 30th anniversary as a member of NARFE as well. I know I started when I was 10. But it's good to be here today. I hope I can answer some questions for you. And at the end of today's broadcast, we will be answering your questions, myself as well as James Marshall, who is NARFE's Deputy Director of the Federal Benefits Institute. Now, obviously, we have a lot of people signed up for today's broadcast, and we probably won't get to every single question. So I do encourage you, if you have additional questions, you can always send those in to fedbenefits@narfe.org, and someone on the team there will answer your question for you and get that answer out. Next month, the next webinar coming up is on July 26th. You may want to mark your calendar for James Marshall, who's going to be talking to you about survivor elections and the value of survivor benefits as well. And the next time I will see some of you will be in Jacksonville in August. On the 26th through the 28th is this year's FedCon, for the first time FedCon 18. And I can't hardly wait to meet some of the other presenters. We've got a wonderful lineup of speakers, and I will be one of them. But I'm very anxious and excited to be there and happy to be invited. So hope to see you there as well. I think that's it for my background information. Let's go ahead and get started with today's presentation. Oh, and by the way, these are recorded. Some of you who are new members may not realize that, but we do keep these archived. So at this time, we have a library of many webinars on various topics. And throughout today's broadcast, I'll remind you of some of those that relate to some of the topics we're going to bring up today. So when we're thinking about retirement planning and the process of retiring, there's different stages we go to prepare. Obviously, the first thing we have to do is make sure that we're financially ready, especially if our plan is to stop working. So we look at our paycheck every 2 weeks, we see the gross salary on that leave and earnings statement, but then we look at the net income after the withholdings for taxes and retirement and insurance, and in many cases that net income could be slightly more than half of that gross amount. So when you go into retirement, you want to make sure you have enough income to cover the outgoing expenses you're going to have, and a good guide is to look at your paycheck to make sure you can replace that net salary, because many of us will continue to spend that same amount of income in retirement, especially if we have it to spend. So planning for retirement has to start with both financial and tax planning before we can go to the next step. We've certainly done webinars on that as well, in fact, as recently as last month, so please go back and review the library. Also, mental preparation. I think for some employees this can be just as difficult as financial planning, making sure that we're not fearful of what life after retirement is really going to look like. After all, you have a schedule at work, you have people telling you what to do and when to do it, and you have a whole group of coworkers who sometimes become your lifelong friends. Leaving that environment can be pretty scary when you're on your own, having to make your own schedule and make new friends. So there is some mental preparation that many of us need to do to not be afraid to step into that life after retirement. But when you're ready, when you're mentally prepared and financially secure, or at least hopefully, then it's time to start the process. Filling out the forms, knowing when to see who, and how to get the benefits started is a pretty daunting task, but it also can be fairly easy if you know the right steps to take. So we're going to start today's presentation by talking about that first basic benefit, your civil service or your FERS retirement. So as I like to do to engage you in this conversation, every once in a while I like to throw out a question to you. So this is just something to think about. I'm going to give you a group of answers and think about which one do you think is the correct answer. So for this first one, it says, how long before your planned retirement date should you submit your civil service or FERS retirement application? So when you're ready to retire, both financially and mentally, when should you turn in that retirement application? So do you think it's 2 weeks before you leave, a whole year, 2 months, or 6 months notice? So how much notice do you think you should give your Human Resources Office so that they can prepare your application to send it to OPM, the Office of Personnel Management, for processing? Well, if you answered 2 months, that would be about right. Now, if you work for a very small organization, it might only have maybe 1,000 or 2,000 employees. They might say 30 days is enough notice for them because they don't process too many retirements. But if you're in a bigger organization like Homeland Security or Department of Defense, you probably want to give at least 2 months notice, if not 90 days. Because in those cases, you might be joined by maybe tens or hundreds of other federal employees retiring on the same day as you from your organization. So you want to make sure when that retirement specialist starts to work on your claim, it's well before your date of retirement, just in case there's something you forgot or something they need to find out before you walk out the door. You don't like to get those unpleasant surprises when you're ready to make that move from employee to annuitant. So as I said, we're going to start with the process of retiring from your agency to becoming an annuitant with OPM and talking about specifically the retirement application. That's the numbers up here on the screen, as you can see. And maybe at some point when you are ready to walk out the door, you can have those forms in front of you and review this webinar, and I'll walk you through it one more time in the review. Also, as part of the retirement application at your agency, not only do you hand in your retirement application, but also the continuation of life insurance. So both of those are the starting point of moving into retirement life. Now, some of you might be old enough to collect Social Security when you retire. You might be 62 or above, which means you're eligible to claim your Social Security retirement, which can also be done at the same time you're filing for civil service or FERS retirement. So we'll talk a little bit about claiming Social Security as well. And then after retirement, you have to decide what to do with the money that you've saved in your thrift savings plan. How are you going to use it? Do you want to take it as monthly income to supplement your federal retirement? Or do you want to save it for later? Or maybe you just want to take it out as you need it. So with your TSP, we need to talk about the withdrawal choices just briefly today, because if you've been watching these webinars, we've done a whole webinar series on TSP withdrawals and financial planning. Now next month, not actually next month, in September, a couple of months from now, James Marshall will be doing another seminar called, or webinar I should say, called The Devil is in the Details. So he's going to dig even deeper than what we're doing today on the forms process and the transition from employee to annuitant. So I'm going to cover a lot of ground today, and he's going to give you some additional details in September. So I know that many of you might be thinking about an end-of-the-year retirement, so you'll get a double dose of benefits expertise to help you plan. So on the to-do list I have for you today is to discuss and complete that civil service or FERS retirement application. Get it right the first time. So we want to talk about some of the places on that application where you could make an error. Then at the same time, you'll be filling out your continuation of life insurance form. So how does that work? What do you need to think about? And what is the cost of that benefit? There might be some additional documentation you need to gather up to include with your submission, and we'll talk about what those are as we get to that form. Your agency should provide you with a final retirement estimate. That will go to OPM as kind of the baseline of the calculation, but remember that the Office of Personnel Management has the final authority over those calculations. So be sure to review your retirement estimate that your HR specialist prepared for you, just to be sure that you understand it, that it's what you thought it was going to be, and if you have any questions, now's the time to ask them while you're still getting a paycheck before you're waiting for that first retirement check. Then we'll talk about the Social Security process, the TSP withdrawal forms, and then a little bit about Medicare, especially for those of you who might be retiring and already past age 65. So the form, the actual application for retirement. When you pull that down off the internet, or if your agency provides it for you, it's a little bit daunting when you first look at it. In fact, there's many pages of instructions even before you get to the part to fill out. But it's really not as bad as it looks. Most of you can fill out the first 3 pages and you're done. So let's go through some of that general information and some of the specific information as well. And I want to highlight some of the areas that could be overlooked or that you might not understand. So the first part of the retirement application is just your name and address and phone number and email address and just the general information, which you think that's pretty straightforward. But the one thing I do want to mention in this section is my experience is sometimes when people retire, they also move, or they may take a big vacation for 3 weeks or a month. So if you're not going to be available to receive mail at your current address, or if somebody else is going to be checking your mailbox, make sure you make that known to your friend or sister or neighbor, whoever's checking the mail, to look for anything with the return address from OPM. Also, if you're permanently moving, be sure to give OPM your address where you live at retirement and the date and address of where you're going. You can even attach a form or a page to your retirement application to give them this information. Keep in mind your retirement application is read by a person, not a machine, so you can attach forms or paperwork to it if you have additional information such as a change of address. You can also change your address once you're logged into OPM services online, and you can go there to also update your address and other information. Next is your retirement date, the date of retirement. And of course, we've done webinars, I've written countless columns on choosing the best retirement date for you. So once you've determined what that date is, now it's time to put it on the application and make it stick. So in this next section of the application is your date of final separation. So if you choose to retire on December 31st, that would be the date you put on that box. That means you'll be employed through close of business December 31st, and the next month you'll be an annuitant. So whatever date you put on your application, you work through close of business that day. That's your final date on the payroll. Your federal employees' health benefits and life insurance will follow you after retirement for a minimum, of course, of 31 days. You want it to follow you the rest of your life. But why I mentioned that is because if you were to retire in the middle of the month, let's say you decided after today's webinar you've learned enough, you're leaving today, and there's still a few more days left in the month of June, you might wonder what happens to my health benefits and life insurance if I need those benefits in the next 2 weeks. Well, those would be still in effect because you'll have that coverage for at least 30 days after you retire. Most of you will have that coverage for the rest of your life because you're qualified to carry those benefits into retirement. But if you do have that little gap between your employment ending and your retirement benefits starting, keep in mind you will continue your health coverage and your life insurance benefit during that time. Also remember, and you know this, that your pay is always paid 2 weeks behind. Remember that first paycheck you got 35 years ago and you had to wait for it? Well, now you'll be waiting 2 weeks for your last paycheck after retirement. So your final paycheck will come following your retirement date, and your lump sum annual leave payout will come as well. Usually the lump sum leave payment comes within 6 weeks, sometimes as long as 8 weeks after retirement. Every once in a while it takes a little longer, so be sure that you take some contact information from not only HR but payroll as well to check on these things if they're coming in later than you might have expected. The next section of the application and one of the additional schedules has to do with military service. OPM wants to know, have you served on active duty? For how long, with what branch of the military, what type of discharge? So many of you have already addressed this information as you were employed because you might have paid the military service deposit. You may have requested retirement estimates with your military service included. But OPM wants you to indicate that on the application, as well as include your military discharge certificate, your DD-214, with your retirement application. Your payroll office, where you paid your military deposit, will report the fact that you've paid your military payback to OPM for you. So you don't need to worry about that, just to make sure that you've paid it, or at least were aware of your opportunity to make that payment. If you're retired from the military, full career retirement, and you've decided you want to include your military career with your civilian career to get one retirement benefit, you'll need to waive your military retired pay about 30 days before you separate from your civilian career. If you're wondering why would anybody do that, you may want to talk to your benefits specialist at your agency and ask for 2 retirement estimates, one with your military service included and the other one just with FERS or CSRS civilian service to see the difference. We have done seminars on creditable service and paying back military as well as civilian deposits. Those webinars can be very helpful to help you understand when it makes sense and when maybe it's better to keep things unpaid. So those are things you can look at following today's broadcast. If you were disabled while serving in the military and you're receiving benefits from the VA, remember that those benefits are not retirement benefits, and therefore they don't have to be waived in order to count your active duty under CSRS or under FERS. So the VA benefits are not what we're talking about when I said military retirement. Another thing you need to tell OPM about is whether or not you have a pending workers' compensation claim or if you're receiving benefits from the Department of Labor Office of Workers' Compensation. So if you were injured on the job and that's still in the process of being resolved, you need to let OPM know about the claim. That way they won't be paying you concurrently with Department of Labor. You can get one benefit or the other, but you can't get both at the same time. In addition, if you filed for civil service or FERS disability retirement, and at the same time you're getting compensation benefits from the Department of Labor, you'll probably choose to take the compensation benefit. It's probably larger, more tax advantaged, but if in someday in the future you recover from your work-related injury, that can convert to a regular civil service or FERS retirement as long as you've applied. Also, if you pass away from something other than the work-related injury, that civil service or FERS application can also allow for your surviving spouse, if you're married, to receive a survivor benefit. So it is important to consider the coordination of workers' comp and civil service or FERS retirement. So you can check with your HR office about that or contact NARFE, who can explain it to you as well. Other claim information. There's a place on the application where you can let OPM know if you've paid back a civilian service deposit or if you've taken a refund of retirement contributions. Also, perhaps if you've already retired once. I met a gentleman this week who already retired, but he's back working for the government as a reemployed annuitant. So when he retires the second time, he needs to let OPM know that there's already a claim that they're paying benefits to him. As a reemployed annuitant, he's either going to qualify for a supplemental retirement or a completely recalculated retirement, depending on how long it is that he came back to federal service. If you have a copy of your refund of retirement contributions or your statement of deposit or your annuity statement if you're already retired for the first time, include those with your retirement application. It'll make it a lot easier to confirm and verify the status of those claims. Then you'll come to a section that says marital information, and there's 2 questions here. The tendency is, if you're single, to skip this section altogether because after all it says marital information. But I would encourage you not to skip. Everyone, single, married, widowed, or divorced, needs to answer these 2 questions. They're simple yes or no questions. The first one says, are you married now? Now if you're getting married the week after you retire, then you would say, nope, I'm not married now. You don't have to tell them you're getting married next week. You can let them know that later. But if you're currently married on the day of retirement, then you need to include your spousal information and a copy of your marriage certificate. So don't overlook that section. By the way, if you do get married after retirement, you will be able to make an election for both health benefits and survivor benefits for your new spouse. In fact, OPM will give you 2 years from the date of marriage to add a survivor benefit to a spouse you get married to after you retire. Now, if your marriage has ended and you've gone through a divorce, there's the second question that says, do you have a living former spouse from whom you were divorced and to who has been awarded a survivor benefit or a portion of your retirement? Now, that's a pretty long question, so the answer to that question is not maybe. It's either yes or it's no. So if you do have a former spouse who has entitlement to part of your retirement and or survivor benefits, then you'll say, yes, I do, and you'll include a copy of your divorce decree or court order. If you have no former spouse, or if your former spouse is not awarded part of your retirement or survivor benefits, then you can say no and move to the next section. Including that divorce decree is going to hold up the claim just a little bit because OPM has to review the case, and hopefully that has previously been submitted and declared a court order acceptable for processing, so that OPM doesn't have to take the time to make sure that it's worded properly and it's written according to OPM's requirements. So if you do go through a divorce, even if you're not retiring, be sure a copy of that divorce decree has been submitted to OPM to make sure it's acceptable. Very important detail. Now you come to what I think is the most important part of the retirement application. This is where you make your annuity election. In other words, what type of retirement do you want? Now, there's 5 choices, and you're going to have to choose one of these 5 boxes. And again, this means whether you're single, married, widowed, or divorced, read all 5 selections and choose the one that you want for your retirement. Now, the first 2, number 1 and number 2, on both the CSRS and the FERS application are for current spouse benefits. Your current spouse is entitled by law to a survivor benefit. In fact, number 1, full survivor benefit, is the default election. That means that if you predecease your spouse, they'll get 50% of your FERS retirement or 55% of your CSRS retirement for a lifetime annuity paid to them after your death. Now, if you have a spouse who says, you know, I really don't need the money, I'll be fine if your retirement stops, then they can waive that benefit, or they can take a partial survivor benefit. So your current spouse could accept a partial benefit under both CSRS and FERS. And sometimes the reason for that is not so much about the money, but to continue health benefits. So maybe they don't need your money, but maybe they need your federal health benefits if you happen to predecease them. So that number 2 response, the partial survivor benefit, not only provides some income, but it also provides continuation of federal health benefits, especially for a non-federal spouse who's counting on you to continue their health insurance. Number 3, the way it's worded on the application says, I choose an annuity payable only during my lifetime. That means there will be no reduction, and when your lifetime ends, the annuity ends. So the good news is you don't have to pay anything. There's no reduction to your retirement, but it's only paid over one lifetime. So if you're single, that's generally the option you'll elect. If you're married and your spouse doesn't need your money or your health benefits, then you can elect that option with your spouse's consent. Number 4, insurable interest, and number 5, a former spouse election. These 2 choices aren't used very often, but let me just take a moment to explain what they are. Number 4 says, I choose to provide a survivor benefit for the person I'm naming who has an insurable interest in me. And then you have a space to name that person. Oftentimes that could be your significant other, and the fact that you're not legally married means you can't name them for a spousal benefit, but they could be your insurable interest. It could also be a relative or family member who might have a financial need for your life expectancy. Keep in mind, when you make this election, you have to show that you're insurable, so there'll be a document that you attach that shows from your physician that you're not going to die anytime soon, so it's a statement of your physical health. Also, the reduction to your retirement is a minimum 10%, a maximum 40%, depending on the age difference between you and the person you're naming. So if you name a child to be your insurable interest, the large age difference could cause your retirement to be reduced as much as 40%. That's why it's not a common election. It's kind of impractical. Most of us couldn't live with a 40% reduction to our retirement. And by the way, the survivor of that insurable interest only gets 55% of the benefit after it's been reduced. So it's not as valuable as that spousal benefit could be. The former spouse election, number 5, is where it might not be in your divorce decree that you have to provide for your former spouse, but for whatever reason you've decided you want to claim or provide that benefit to one or more former spouses. Now, you have the option to do that, but I have to be honest, I've rarely seen that used. And if you're currently married, you would have to get your current spouse's permission to provide part of that spousal benefit to a former spouse, be careful, because then you might have two former spouses if you try to ask that question. So that one, as I said, is not very common. Now the next part of the application you may not need. It's the spouse's consent to your annuity election. So as I said before, your current spouse is entitled to the full survivor benefit, which was the #1 election. So if you're married and your spouse is waiving their right to that benefit, or they're taking a smaller survivor benefit, they're going to have to give their notarized consent. So this part of the application is to provide that consent. So your current spouse would sign it in front of a notary, and that would show OPM that they know that they're not going to get the full survivor benefit if you predecease them. Insurance information, that's another section of the retirement application that gives OPM its first indication that you want and are entitled to keep your health insurance, life insurance, and other federal insurance benefits. So you're simply going to indicate here that you have health insurance, you have FEGLI life insurance. Also have to let OPM know if your FEGLI has been assigned to somebody else. Oftentimes in a divorce, the assignment of that life insurance beneficiary has been made. So if that's the case, you indicate that here. Also for FEDVIP, the dental and vision supplement, as well as FELTSIP, the long-term care insurance, you also indicate if you have those coverages, and there's some information on the application that will give you a heads up that you might get billed for the dental, vision, and long-term care insurance while your retirement benefit is being processed. So don't be surprised that after retirement you get a bill, and just pay the bill every month until OPM puts those benefits in your retirement annuity. Now as far as health benefits, FEHB, and FEGLI life insurance, OPM and your agency will take care of transitioning those benefits directly to retirement, and you won't be billed for your health benefit premium or your life insurance premiums as long as you're entitled to keep those benefits in retirement. If you have children at retirement who are still dependent, whether it's a child who's unmarried, under age 22 and still in school, or if you have a child who's handicapped who's entitled to health benefits to continue past the age of 26, or you have a child who's incapable of self-support, you want to list those children in this section. This way OPM is aware of them, so that if something happens to you and the children are still dependent, they can be aware that they may be entitled to continuation of health benefits and a separate children's survivor annuity. The current value of that survivor benefit is $522 a month per child if there's one parent living, and it goes up to $627 if the child is left orphaned. So this is nothing that you have to pay for or take a reduction for. This is just information that OPM will keep on file for you and for your children's future. The next part of the application is where you tell OPM where to send the money. So this is your direct deposit, checking, or savings account allotment. Also, you want to indicate your tax withholding. Keep in mind that the standard tax withholding from your civil service or FERS retirement check is married with 3 exemptions. So if that's not enough tax withholding for you, then you might need to file a new W-4 or let OPM know that you would like them to use the same withholding that your payroll office had used from your paycheck. So this is the part of the application where you indicate that. If you're going to file a new W-4 for tax withholding, you want to include that with your retirement application. Now keep in mind that your state tax will not be withheld initially from your federal retirement benefit. So even though you have state income tax perhaps withheld from your paycheck, once you move into retirement, you'll need to start that with OPM after your claim has been adjudicated. So that might not be for a couple of months after you retire. So keep in mind that you may have a deficit when it comes to state income tax, that you might want to make estimated payments if your state collects tax on federal retirement benefits. And by all means, don't forget to sign the form. Now this might sound pretty commonplace, but think about it. If you filled out your retirement application 6 months before you're ready to walk out the door, and you're not going to turn it in for another 3 or 4 months, you don't want that signed application hanging around your desk. Some coworker might drop that off at HR and get you retired before you were ready. So most people don't sign their application until they're ready to turn it in. But when you do that, don't forget to sign and date it. The signature line is on the 3rd page in the middle of the page, so sometimes it is easy to miss. But that's That's a little thing that could hold up the whole works, so don't forget to sign it. The next part of the application is the part you don't need to fill out. You're going to see a form that's called Certified Summary of Federal Service, which is going to be a chronological history of your federal career with all of your service history on it, and also all of your basic information like name and social security number and date of birth. Your agency's retirement specialist will fill this out for you and hopefully return it to you prior to your separation so that you can sign it and certify that it's accurate. So when you do get that filled out, completed form back, you want to look at it very carefully to make sure everything's spelled correctly, the dates are correct, the retirement coverage is accurate, and then you can check the box that says the service is complete and you agree with that before it goes to OPM. There's another box on the form that says I have additional service, obviously that the agency doesn't have documented or there's not enough evidence to put it on this form. I would not like to be in that position, because if your form goes to OPM with service that hasn't been verified, that certainly can hold up your retirement application. This is why we like to see federal employees do mid-career retirement planning or even early career, where if you find that there's service history missing from your official personnel folder, don't wait till you retire to find it. Talk to someone in your human resources office who might be able to help you locate those missing records or let you know what it's going to take to make that service count and whether or not it even is creditable. Okay, let's take a little break because that was a lot of information about filling out the retirement application. So now we talked about how long before you retire to turn in the application. Now, how long do you think will it take to process the application once it gets to OPM? Remember, you turn in the application to your employer about 2 to 3 months before you retire. Then finally that day arrives where it's your final day on the job. So once you go home and you're waiting for that first check to come, how long do you think it's going to take to finalize and adjudicate that retirement claim? Well, here's your choices. Do you think it takes only 2 weeks, maybe a whole year, maybe 2 months, or do you think it takes around 6 months? Well, it really depends, but OPM shoots for 60 days. That's their goal, is to process the claims within a 60-day timeline. There's a lot of people who retire from federal service every single month, and at certain times of the year, such as mid-year and end of the year, there's a spike in retirements, sometimes for tax planning, sometimes for annual leave lump sum payout, so they get a lot of applications around the mid-year cycle and also at the end of the year. So these are times when they have even more claims coming in to process. Now, before this year, OPM used to show their inventory of claims, the claims that they've received, and the amount of claims they process from month to month, so that you and agencies can be aware of how long it might take to process your claim. So last year was the last time they put out a chart like this. I just wanted to give you a little bit of an idea of the history of how long, or actually how many claims OPM processes in a given month. So they generally receive anywhere from 5,000 to 15,000 claims every single month. Like I said, some months are busier than others. They can process at OPM at least 5,000, sometimes as many as 12,000 claims per month. So they try to keep up with what's coming in. But at the same time, they've got claims that they've already received that are still in process. So at any given time, they have an inventory of anywhere from 12 to 20,000 claims. Remember, these are processed by personnel at OPM who have to go page by page through your career history, take those retirement applications, do the final processing, and sometimes that can be tedious work when it comes to former spouse benefits. Maybe it comes to something in the application wasn't completed properly. Maybe the agency neglected to send a certain important piece of document. So there's any number of things that can make that retirement claim a little bit more difficult to go through the process. Now, the way OPM puts out this processing information now is to tell you what the average time is, what the average claim processing is. So right now, the average processing in days ranges anywhere from as quick as 45 days to 75 days. But on a monthly average for this fiscal year to date, it's been averaging 60 to 70 days, which is pretty much on target. OPM is pretty happy with that standard because their goal is to process your claim within 60 days. So here's a little bit of an idea of how that works. So let's say that you were going to retire this year on December 31st. That's your last day on the payroll. You put your retirement application in October or at least by November. So you did your part to get everything in on time. Well, your agency won't send that application to OPM until you're off the payroll, because what if you change your mind? They don't want to send your application for processing while you're still employed. So usually within a short time after your last day, your HR office will have that package ready to go to OPM, generally within a month, sometimes as early as 2 weeks. So once OPM gets the claim, they log it in, they assign you a claim number, and they start the process. So if you went out December 31st, you should expect to hear from OPM in early February, maybe the first week of February. You'll get an interim payment saying that, hey, we got your claim, we know you need the money, so they'll start sending you interim retirement checks as long as they are very clear that you're old enough to retire and have enough service. They'll also give you a claim number called your Civil Service Annuitant number and give you instructions of how to log on to OPM services online so that you can start to check on the status of your claim, report any change of address, and do some other things online that won't require a phone call or any type of written correspondence. Now after that first interim check, the next month, let's say now we're into March, on March 1st you'll get another interim check, most likely, and again, OPM is continuing to process your claim, so they're sending you monthly interim checks while you wait. If all goes well, by April 1st, you'll be finished. You'll get your retirement booklet, you'll get your final annuity catch-up check, and then you'll start getting regular retirement payments every month like clockwork. But that initial transition can take 2 to 3 months. Hopefully you won't go without a paycheck any of that time. So you get your final paycheck from your agency, your lump sum annual leave check, the interim retirement checks, and then everything starts regular process. All right, so here's a little fun trivia question. In what state do you think most retirees live? So which state do you think holds the most federal annuitants? Well, this is a little tricky one because I know that Maryland, Virginia, and D.C. are 3 states. But here in the D.C. area, sometimes we just call it the DMV, like it's one single entity. So is it in the DMV where they mostly live? Or is it Florida? That's where we moved to when my husband retired 4 years ago. Or is it California or Texas, which are both very large states? So what do you think? Well, if you said the DMV, you would be correct, and I think many of you probably could have guessed that because we have so many headquarters level agencies here, and many employees spend their entire federal career in the D.C. area, and they end up retiring here as well. Pretty nice place to live. So between Maryland, Virginia, and D.C., quite a large number of federal retirees. But if you took any single state by itself, California would have been the winner. Such a large state with large populous areas, they've got over 200,000 federal retirees just in that state alone. So think of the political power those Californians hold when it comes to legislation as well. You know, you always want to watch that NARFE legislative section to see what's happening up on Capitol Hill. All right, back to work. Let's think about some of the additional documents you might need to include with your retirement application. So that insurable interest election we talked about as one of your survivor options, if you do choose that option, you'll have to provide proof of insurability. That's the only election that requires that. A spousal benefit, you don't necessarily have to be in good health. Military documents, if you declared military service, then you need to provide your discharge certificate, maybe your military retirement award letter, things like that. So be aware of that, and also you might want to talk to your agency retirement specialist to see what it is that you need to provide. They may have some of that documentation in your personnel folder. Now under the old system, under CSRS and CSRS offset, you may have started a voluntary contribution savings account through civil service. If you did, you need to decide what to do with that money when you retire. So you'll need to submit the election form to tell OPM where to send the money if your plan is to take it out. Now, if you've never made voluntary contributions and you're under CSRS or CSRS offset, it's not too late to open an account if you're still employed. So you can get a standard form 2804, which is the application to open the account. And you can read more about that on OPM's website. Also, in NARFE magazine, we've written articles about it. And if you just Google it, you can find a lot of resources on the Voluntary Contributions Program. It's kind of a little-known program in most federal agencies, especially since there's such a small population left of CSRS employees. But for some of you under the old system, it can be a nice way to shelter income from taxes, and who doesn't like less taxes to pay? So that's called voluntary contributions. Another thing you may want to think about as you prepare to retire is to be sure that your beneficiary designations are up to date and current. If you don't have a beneficiary designation on file, then everything follows standard precedents: spouse, parents, or spouse, children, parents, then your will, then next of kin. So if you want to change that order, or maybe you already changed that order when you were hired, you may have listed your mother as your beneficiary for your life insurance. And now 35 years later, your mom's still around, but in the meantime, you may have gotten married and have 3 children. So you want to make sure that that beneficiary reflects your current wishes and the current precedents that you want those benefits to be paid. So it may not be a bad idea to file new beneficiary designations at the time you retire, just to be sure. You'll have one for TSP that goes directly to the thrift. In fact, you can fill that one out at tsp.gov by accessing your TSP account and using the wizard that will help you complete the form. Then you can print it out and have it witnessed. The ones for FEGLI and CSRS or FERS can be found at opm.gov, and you fill the forms out, have them witnessed, and then turn them in to the appropriate office. So depending on whether you're retired or still employed, depending on whether you're CSRS or FERS, will determine where those forms get sent. So just look at the form's instructions. It will tell you where to submit them based on which one you're filling out. So you might need to update all 3 of those. Most of you certainly want to continue your federal health benefits and your life insurance into retirement. Later this year, we'll be doing webinars on continuation of health insurance, open season, Medicare coordination, so look for those coming up in October and November. But in the meantime, just be aware that you need to have 5 years of federal health benefits and life insurance coverage in the years preceding your retirement in order for those benefits to be available to you in your retirement years. You also have to be eligible to retire when you leave, rather than being a resignation with a deferred retirement. Now, some of you under FERS might be old enough to retire, but you don't have 30 years of service. Maybe you're 58 years old, but you only have 15 years. In that case, you may be eligible for something called a reduced minimum retirement age plus 10 years retirement. Sometimes it just goes by MRA plus 10. Now, sometimes FERS employees who are entitled to that benefit want to retire, but they don't necessarily want the reduced benefit. So what they'll do is they'll postpone receiving it. That's still an immediate retirement even if you postpone the benefit. But your health insurance and life insurance won't be reinstated until you make claim to that benefit, whether you're waiting until you're 60 or even 62 years old. So keep that in mind. And we have discussed that in some of our previous webinars when we talked about eligibility for retirement. So your life insurance does require another form. So you have your civil service or FERS retirement application, and now this form tells OPM how you want to continue your federal employees group life insurance. Whether you just have basic coverage or whether you have optional coverage, all of it is taken care of on this form. Now, most of you maintain basic FEGLI. In fact, you were automatically enrolled in basic FEGLI when you were first hired. So if you didn't waive it, you probably still have it. You'll probably want to carry that with you into retirement. That's your salary rounded up to the next 1,000 plus 2,000. You're currently, as employees, paying 15 cents per thousand biweekly to maintain that coverage, regardless of your age. So when you retire, you tell OPM how you want it to continue. Do you want it to continue at no reduction? Or are you willing to let it reduce by half? Or do you want it to reduce by 75%? Now, obviously, each one of those 3 choices results in a different premium. The most common election is the first one, the 75% reduction, because that one says, once I'm 65 years old and retired, it's free. I don't have to pay for my basic life insurance if I'm retired and over 65. But at the same time it becomes free, the original coverage starts reducing by 2% a month until it reduces by 75%. It takes about 3 years, but you'll still be left with 1/4 of your original coverage. So that's the coverage that will stay with you the rest of your life. The same basic thing happens with option A. The standard option A is an additional $10,000 worth of coverage. If you've held that for 5 years, it does the same as the basic under the 75% reduction. Pay for it until you're retired and 65, then the $10,000 benefit slowly reduces down to $2,500 over a 3-year period. Now with option B, that's the one where you may have elected multiples of your salary up to 5 times your pay rate, or option C, which is family coverage on your spouse and dependent children, up to $25,000 on your spouse and $12,500 on each child. Those two benefits can continue at full reduction or no reduction. So if you tell OPM that you want no reduction for option B, then every 5 years until you're 80, the price is going to escalate. As you can see by the example on the right side of this slide, that escalation goes way up in your later years. So this example shows $245,000 worth of option B coverage that at age 55 was $106 a month. But when you turn 60, it more than doubled. It went up again at 65, 70, 75, and look at it at age 80, $1,400 a month to maintain that policy. Now, if you elected no reduction, but you don't want to pay those high premiums, you can still cancel that election. So, but if you wanted to just automatically reduce once you're retired and over 65, then you just simply check the box that says, I want full reduction, so automatically OPM will start the reduction once you're retired and over 65 at no further charge. But of course it's going to reduce to 0. Now Medicare has always been a popular topic amongst federal retirees. After all, you don't have to enroll in Medicare Part B and your federal health plan will still continue to cover you. So what are you to do? Take Part B, not take Part B? That's the never-ending question that NARFE receives. I get that question at seminars all the time. But if you've decided you want to add Part B of Medicare to your federal health insurance when you retire, if you're already over 65 years old, you'll have to enroll in Medicare maybe at the same time you're retiring from federal service. So if you're over 65 and you're choosing to enroll in Medicare Part B, you're going to have to do that through the Social Security Administration. There's 2 forms that you'll need, and you can see them on this slide. You can also contact Social Security to let them know. Now the one form that you need has a portion that has to be completed by your agency to verify that you were employed and had health insurance through current employment. So whether you're the employee carrying the health insurance, or possibly maybe it's your spouse who has you under their Self+1 or family plan, that current employment coverage allows you to delay Part B enrollment without a penalty for late enrollment. So this is an important 2-step process to get Medicare Part B at the going rate rather than to pay a penalty for late enrollment. We're going to be doing another Medicare and FEHB webinar in October of this year, and there's several in the bank that are archived that you can go back and watch if you're retiring sooner than October. So feel free to take a look at those as we discuss all the Medicare options. I mentioned earlier that OPM has services online. This is where retirees can go to make changes to their benefits, change their tax withholding, change their address, change where the check gets deposited. You can view your retirement services reference card. You can get your 1099 for tax purposes. Maybe you're borrowing money and you need proof of your retirement benefit. You can go to Services Online to get that at OPM's website. Now OPM will give you instructions of how to set up your account once they process you into the retirement system. So don't worry about that just yet if you're still employed. You'll get that information with your Welcome to Retirement letter from OPM. You'll get your civil service annuitant number, which you'll need to set up the account. Some additional things you can do at Services Online is change your tax withholding and set up your state tax withholding as well. Now some of you might live in states that either don't have a state income tax or that don't tax federal retirement benefits. And if that's true, you don't have to worry about, obviously, state tax withholding. But if you need to have state income tax withheld, you can check on Services Online to see if you can set that up there once your retirement claim has been processed. And you can see all the other things there that you can do. Anything you can do to avoid calling OPM or writing to them is going to be to your best interest. You can imagine how many phone calls and how much written correspondence goes to OPM each and every day. And some of that can take a long time to respond to. It can be a little frustrating to wait on hold on the phone. So if it's something you can do electronically, it's going to be a lot more efficient and a lot less frustrating. One of the things I wanted to mention, a very important thing to talk about, are changes you can make after retirement. Now, we did do a webinar last year called the 5 Things You Can Change After You Retire. And one of those things is your marital status, right? You can become married, you can get divorced, you can become widowed. All of those life changes might mean you need to make a change to your retirement benefit. Now, initially, when you first retire, you have a 30-day window that you can make a change to your survivor election with no penalty. So if you did make an error and you need to update that, you can go ahead and do that within 30 days. 18 months following your retirement, you can change a partial survivor benefit back to a full survivor benefit, or no survivor benefit back to a full one. Sometimes I've seen situations where an employee retires and unfortunately becomes diagnosed with a serious illness. Maybe the spouse had waived their right to the survivor benefit and now circumstances have changed. Be aware that within that 18-month window you can reinstate the full survivor benefit, but there is a pretty significant penalty for doing so. But it's good to know about that. If your marriage ends after retirement, whether it's through death of your spouse or divorce, you can restore your full annuity from the unreduced amount. Now, if you go through a divorce, remember that in the court order or divorce decree, survivor benefits might be awarded to your former spouse. So that's something that'll be handled at the time of your divorce with that divorce process. Be sure to send OPM a copy of the divorce decree so they can be sure that the court order is adhered to. Right? They have to follow those instructions. 2 years after you get married, if you marry after retirement, you'll have a window to elect a survivor benefit for that future spouse. So if you marry after retirement, you will still be able to choose a survivor benefit election, as well as to add your current spouse or your new current spouse to your health benefit program. So those are just a couple of things that you can change after you retire. All right, the next benefit you might want to start and turn on is your Social Security benefit. Maybe you're already over 62 years old and you want to receive Social Security benefits at the same time you retire from federal service. That's going to require contacting the Social Security Administration. Your agency doesn't handle applications for Social Security. So you go to ssa.gov to start the process. Or you can call the Social Security toll-free number and do it that way as well. If you want to meet with someone at your local Social Security office, you want to make an appointment before you go. You can do that by contacting socialsecurity.gov or calling the toll-free number. But you can also file for benefits directly online. You don't have to go anywhere. So if you want to do it online, maybe it's going to take 15 minutes if you have all the documents in front of you to make that application. So feel free to do that as well. It's not hard to do. I've helped some people do it. It doesn't take that long. TSP. So after retirement is when you'll take your post-separation withdrawal from the thrift. Some of you may have already taken a distribution from your TSP account while employed. There's an in-service withdrawal that you can do if you're 59 and a half or older and still employed. Now the other thing, we've talked about this at the last TSP webinar, which we did back in April, but the TSP is going to be going through some changes to the withdrawal options, which are improvements and giving you more choices for how much flexibility you'll have in taking that money out. So that's coming. In fact, that's called the TSP Modernization Act that will be implemented as early as next September. Congress gave the TSP 2 years, which would actually be next November, to implement the changes, but they've promised to try to have it mostly up and running no later than September of 2019, which is not this year, but a year from now. So those changes are going to include multiple partial withdrawals, multiple changes to your monthly payments, and the ability to stop and start the monthly payments if you decide to go back to work or that you don't need the money. So you can't do that currently, although that's coming shortly. So if you want to start your withdrawal option under the current rules, you can certainly do that just as you always could. But if next year comes around and you want to make the changes, you'll still be allowed to make changes even though you've started your distribution. The only thing you cannot change is if you purchased a life annuity through the TSP. That's a life annuity, and that's your choice. But if you're taking monthly payments, or if you've just delayed your election, you'll be able to take advantage of those changes that are coming next year. Currently, you can only take a one-time partial distribution of your thrift. You may have done that while working as an in-service withdrawal, or you may have waited until after separation to take a partial distribution of a certain amount of cash from your account. Currently, that can only be done once, but as I said before, starting next year or later next year, you'll be able to do more than one, in fact multiple partial distributions as you need the money. That account has to be you have to at least withdraw $1,000 or more for it to be a partial distribution, but in many cases I've seen a lot of money as a partial payment where someone's paying down a debt or reinvesting some of that money. So that's something you can look into if you're interested, and also we've talked about those in prior webinars. Another thing you need to be aware of is the required minimum distribution deadlines. Now again, this is partially tax planning, financial planning, as well as benefits, so be real careful here. If you're already past age 70 and a half when you retire, OPM will notify you with your information from the TSP about your requirement to take a required minimum distribution. If you're already receiving payments by the time you turn 70 and a half, TSP will make sure you're taking enough out to meet the requirement. Now, if you reach age 70 and a half after you retire and you haven't started taking payments from the TSP as of yet, then the TSP will use the address they have on file for you to notify you about this important requirement. So one thing to remember when you leave federal service is to be sure to keep your address current with not only the TSP, but also with OPM and with Social Security. These are important organizations that are going to be providing you your retirement income. So keep them abreast of any of those changes. On the TSP 70, which is the full withdrawal application, you actually have 3 choices to make a full withdrawal. You can do all 3 if you want. So in other words, you could tell the TSP that you want to take 20% of your balance as a single payment, maybe 30% as a life annuity, and the remaining 50% send it to you at $1,000 a month until it's gone. So that would be considered a full withdrawal even though you're taking monthly payments out of your current account balance. Now under the new rules that take effect next year, that item C, which is TSP monthly payments, is really where we're going to see a lot of change. You'll be able to make changes to that monthly payment amount every month. You'll also be able to stop the monthly payments and start them back up again later. When you're taking a single payment withdrawal, a portion of your balance, you'll be able to do that more than once, and you'll also be able to do it while you're receiving monthly payments. So if something comes up where you need a large amount of cash, you'll be able to access your TSP balance to get it. Now, when you're filling out the forms, you have 2 ways to do it. You can print out the forms, get out an ink pen, and fill them out and keep your ink pen within the little boxes. But my suggestion, my strong suggestion, is to use the TSP Wizard tool. This means you're going to access your online TSP account using your password and PIN number. Elect the withdrawal option from the side of the menu, and you'll be prompted to different sections of the form that pertain to your request. It'll pre-populate some of the information in the form for you, and most importantly, everything will be neat and legible because these forms are read by a computer scanner. So you want to be sure that they're filled out accurately the first time so that your first payment is not delayed. If everything goes on time, you'll send the form directly to the TSP or fax it to them, and that will start your withdrawal process. Now on that TSP withdrawal form, you can't submit it online because you're going to need to attach something to it, and you're going to need to get some notarized signatures. The TSP, if you're a married FERS employee, wants your spouse's consent to your election. That's a requirement by law. In addition, they also want your notarized signature to say that you're aware of what you're electing, you've read the rules, and you understand what it is that you're doing. I would encourage you and highly recommend that if you're not sure about your election, that you contact the Thrift Line to go over your questions and concerns before you submit that form. There's nothing worse than saying you want a monthly payment and then you can change the amount, but instead you've elected a life annuity. That's two different things, and it could be a very horrible thing because you can't change the life annuity election. So be sure you understand those choices. You also want to let the TSP know about tax withholding. They also do the married with 3 exemption standard withholding unless you tell them otherwise. So you can send them a new W-4 just like you did with civil service or FERS to elect different federal tax withholding. Now the TSP will not withhold for state income tax. So you'll have to pay your state income tax directly to the state or from some other source of income. So again, as I said, mail or fax the form. It'll tell you right at the end of the form what to do with it, and that will get your TSP payments started. So there you have it. It's basically a 3-step, maybe a 4-step process to go from employment to retirement. So that includes filing your application for SERS or FERS, possibly squeezing in a 2nd or 3rd career. Maybe you're going into full retirement where you want to start your Social Security benefits and your TSP distributions. So that's an overview of it. Remember, I told you that James is going to be talking in a lot more details in September, so you might want to check back to that webinar as well. So that finishes up today's course. I wanted to again thank GEHA for sponsoring today's webinar, and you can find information about your countdown to federal retirement, as well as information about understanding how Medicare works with GEHA and other federal health benefits. So please take advantage of that information, and also please stay tuned as James, Marshall, and I prepare to answer your questions coming up just in a minute or two. So thanks again. Hope to see you next time, and also hope to see you at FedCon at the end of August in Jacksonville. See you then.